Stock Play of the Day Overtime is an educational program. Any statements made by Ally Invest employees are not intended to be or should be considered investment advice, a recommendation to buy, sell, or hold a security, or a recommendation to adopt an investment strategy.
Hello and welcome to the Stock Play of the Day Overtime. On Tuesday's Stock Play of the Day, we talked about JETS. That is an ETF that tracks the airline industry. Today we'll discuss, did we score or did we fumble? Hello, I'm Brian Overby. I'm the Senior Options Analyst with Ally Invest. On Tuesday's Stock Play of the Day, we talked about JETS. Kelly Cox, the stock analyst on the show, actually kind of mentioned that might be a little bit long-term bullish in JETS, but in the short term, we see some weakness overall. So there are two strategies that we considered on Tuesday. One of them was the long put spread, long put, which I'm showing here in the options playbook. And that long put basically came about because we've seen a big drop off in implied volatility in this ETF. It was at year lows as far as the options implied volatilities were concerned. The other strategy that we looked at was actually selling a put to possibly buy the stock in the short term if we did get a drop. In other words, we're saying we're going to put a limit price using the strike price of the put, saying if the stock comes down to that level, we would be willing to buy 100 shares of stock. Now, with implied volatilities at the lower end of the range, selling options is not as optimal as buying options. So we opted to buy a long put. So let's see what happened in JETS since Tuesday. And right now I'm showing my chart in JETS. Now this is a 15-minute chart. We always tape the stock play of the day at noon Eastern time on Tuesday, and it's a live show. So the markets are rocking and rolling. So here is noon Eastern time, and this is where the underlying stock was at, about $27.10. That's it fluctuated obviously during the call, but by the end of the day, it was actually up a little bit, about a dime. Then we had a little bit more of an up day. This is all day Wednesday trading, and then we actually had a pretty big down day, pretty big down candle right here on the 15-minute candle on the open on Thursday. Traded down all day long, actually ended up down lower than it did on the open. And now we kind of got a little bit of just chop going on in the marketplace. So I mentioned that the chart was a little bit bearish, and now we're zoomed out to a 6-month chart. This is actually the line that I drew on the 15-minute chart. So that's where the underlying stock that's where we bought the stock at. But we see this area right here, and I want you to concentrate on my crosshairs on my chart. And we see we came up and hit a little bit of resistance right here, had touched that resistance, and then had a big breakout to the upside, had a big breakdown with a big candle coming back and forth. Little bit like, oh my gosh, we're going to break out again, never happened. And guess what? That just happened again. Basically, the exact same range for all that Wednesday trading that I highlighted. We came up, touched that resistance level, and we just couldn't break through. Now, every time that we touch that resistance level, the odds of breaking out to the upside go higher and higher as far as charts are concerned. But it did what we wanted. We wanted a little bit of a back off. Now we got the lower end of the channel that we want to concentrate on. Got a little bit of chop right in here at the 25.75 level, but ideally all the way down around the 25 level would be our target for this underlying stock moving forward. So let's see what happened with our option trade. If I go to the Ally Invest option chains, we see today that right now the stock has moved quite a bit, but it's down 4 cents overall. And we went out to the July 16th expiration. Now, why did we go so far out in time on a shorter term trade? Well, when we're buying option contracts, we would prefer to err by buying too much time. It doesn't hurt you quite as much. Now, granted, you do have to pay for time, so it's going to be a little bit more pricey than buying a near-term option contract, but the time decay will be slower. It will be slowed relative to buying a shorter term option. And because implied volatilities came down, we looked at buying at that time. It was the at the money option contract, the 27 strike put option. Now here's puts on the right hand side of your screen, and we see the bid and ask right now is 136 by 144. We paid $1.15, so we're up a good bit percentage wise on our put option, but we're still kind of hanging around, see what's going on with the chart. We had it bump up against resistance, and now it's coming back down. We hope it goes back to the lower end of the channel before going higher again overall. So we would just stay the course with this. But right now you have about about a 25-cent gain on a $1.15 option. That's a nice percentage gain overall. So if we were to trade out of it, and you might want to put a limit order in to do this, if you want to target a specific price and you say, okay, I'm going to close out this position if the option is trading for, and you can pick that number, we'll make it $2. So that would be a 85-cent gain. So we'll just go $2. We're just going to put this trade in. It's not meant to be a recommendation by any means. As always with the stock play of the day, we're just trying to learn. And one of the biggest lessons that we're learning here was we wanted to buy options because selling options wasn't quite as optimal as buying options in a lower volatility environment overall. So we are going to sell to close. We bought to open. To get out of the position, you'd be selling to close. One, make sure it's the same expiration and strike. Put option, right now the mid price is 140. We're going to go in and say a limit price of $2 and make that good till cancel. And I would have this, it doesn't mean that you have to wait around until this order executes. You can get out of the trade at any point in time. And if it goes against us, and we saw it bump up against that 2720 level, I think is where it was, and see it actually break through to the upside, well, at that point in time, as far as the chart is concerned, that would be a bad sign. If we could get a close above that level, then we'd probably just want to get out of this position. But right now, we're going to shoot for $2 on the downside. We're going to leave this good till cancel, not just for the day. We're going to leave this good until we actually cancel this. So this order will stay live out until the expiration date of the option contract, which is 42 days away. So it will live unless you actually go in and cancel it. And that would be our official paper trade for the stock play of the day overtime edition. Now, if you had this position on, I always talk about an alternative trade. So now you are up on this position. If you still want to buy a little bit lower and you want to target that 25 level, well, you might go on out and actually just sell this put. If you sold this put right here that I'm highlighting, I'm going to sell this in this instance, you're just now saying, I'm going to bring in 50 cents. I'm going to take 50 cents off the table. And I say 50 cents because I'm pointing at the bid here. And I'm still going to implement that second strategy. But now that 25 strike is actually giving me something. That was probably only trading for about 25 cents on Tuesday. Now it's trading for probably closer to 50 cents in this instance. So because of that, maybe now I sell the put. I will remain long this one. And if it gets down to this range, well, okay, I'm going to buy the stock. If I do it, I want to do it on a cash secure basis, meaning that I have the money to buy 100 shares at that 25 level. If that's our outlook, then we're going to remain long the underlying stock going into the rest of the summer and hope that the travel picks up. All right. So gave you two different alternatives here. We talked about just buying a put outright and being bearish in the short term. So that was the simplest trade. One alternative, if you wanted to combine the two strategies that we talked about on Tuesday, now would be a pretty decent time to do it. And as always, if you'd like to learn more about option strategies and optionsplaybook.com, please make sure you click subscribe and ring the bell. And we are here and we'll be here next Tuesday for another edition of the Stock Play of the Day. Thanks for coming, everyone.